my high school graduation picture just in case.
I may have to let some people in, so we'll delay this for just a second, even though this is recording right now. So don't say anything. Otherwise, I'll have to edit out anything you're saying. We don't want to do that. All right, we're populating nicely, and I have not had to let anybody in. Everybody who wants to be in is in. Let's just make sure. You know, Zoom has done a lot of retooling in the past couple of days just to take care of that security issue, and it's amazing how they can move really on a dime in order to be able to get this all taken care of. It's really neat. Yeah. Well, welcome to today's webinar. We thank you for joining us. This is a weekly event that we've done mostly on Thursdays, but you've seen us on Tuesdays too. This is an update. It's an update as to what we're doing in our office, which will help you. I've gotten some input from many of you, and thank you for sending the input, because frankly, when you send us the input, we can help you better. You all know Danielle, and Danielle works as office manager, and as many of you know, she's a periodontal practice consultant. So Danielle, good to have you with us.
Thank you. Good to be here again.
And then we've got a star. We got a superstar. We got Paul Auslander. Paul, you've seen on CNBC. You've seen him on Bloomberg Network, and he happens to be on an American Academy, or not. This is not an AAP, but a periodontology webinar. Paul, thank you for coming to our level.
It's a pleasure. Let's downplay the star status, but it's great to be with you. Thank you.
Thanks, Paul. So let's talk a little bit about an update. Let's talk about what's going on in our practice first. And Danielle is going to participate in that. And frankly, Paul can help us with some of those things too. So here's what we've done. This week, we have become an emergency practice. And I've got to tell you, becoming an emergency practice has become important, not from an income standpoint, from a service standpoint. I actually felt like I was doing something. I felt useful. For those of you, and yes, there's a little bit of income that came in, but that isn't the point. There are a number of people who need to be served, whether they're patients of yours or patients of ours or not. And they're so appreciative that a surgeon can see them. So for those who are thinking, well, let's ride out the storm and close the practice and I'll come in only when I have to, frankly, if you open up your phones a little bit, and by the way, we're not answering the phone. We have a very good message, and those who want the message, just let me know, and I'll send the message out to you as far as what we're putting on our voicemail. But we're checking our phones every hour, and those calls that need to be taken, and meaning emergencies, we're getting with them. Those who have to reschedule, of course, we're getting with them in a different fashion. But to have your practice open at this time makes a big difference to everybody in your community. Whether we're talking about your refers or whether we're talking about opening yourself up to the public. You all know what we do. We've opened up ourselves to the public for years and years and years. This is time to experiment with that. Also, I think what we're discovering and what we have talked about is how are our services going to differ once we come out of this? Are we going to be exactly the same as we were? And so I'm recommending you do what we're doing. Open up your minds to what you can do to service the public. Because if you're doing a lot of elective care before, it may not be elective care coming back. If you're trying to control periodontal infections, let's look at it from an infectious standpoint. And whether we're using a microscope, whether we're using oral DNA as a diagnostic tool, let's come up with some diagnostic tools that will differentiate ourselves in order to be able to serve our patients better. It may not be so much the soft tissue grafting and the cosmetic stuff. It may very well be what we can do to control disease in order to be able, or to take care of disease in order to be able to help your patients. So this is a time we can kind of look and say, all right, I've been practicing this way, and it was really good. I was practicing this way. I think we have to open ourselves up a little bit more to see what it's going to be like. We can test the waters when we get back. But if we open ourselves up, and remember, we're dentists first, and we're periodontists second, I think we're all going to come out of this a little bit better because we're providing more service to the patients that need it. So anyway, that's my comment. Anything, Danielle, anything you want to add to that? Or Danielle, I cannot hear you.
There you go. Somehow it hit me.
Thanks.
But yes, I think that we're all getting to the point of understanding the only people that are going to be in trouble after this are the ones that are expecting things to go back to so-called normal. We all do need to find that new normal, and along the way, we are finding all these new normals. And as we like to do in the IDS, which we try everything and then we share with you what works. So I think we're doing that right now. We're trying everything. We tried to keep the staff on. We tried to, do the furlough for the staff. Now we're, working on, okay, part-time, some back, answer the phones, don't answer the phone. So, we're trying all these things and we are finding these niches that are working. So we're trying to keep our name out there. We're trying to keep people talking about us in a good way out there, stuff on Facebook out there. So we're trying to keep all this stuff happening so that we don't fall too far behind. And along the way, Dr. Shell and I talk every day about it. It's what is our new normal going to be? So, open up your minds. I sent an email out to all the members the other day. Just try to think about all those things that you've been putting off for all these years, all the things that you wish the ways that you wish you could practice, the structures you wish you had in, getting to all these things that you couldn't do before because you were really busy. Let's do them now. Let's get ahead and think about all the things that we can add on and start once we open up our doors again. And it's not that far away. So we do have that list that we're going through, and so that we can do that ourselves, but we're trying to take care of all that stuff and also find out what is going to work for us right now. And it is advertising ourselves as emergencies, getting all these patients in, whether there are patients or not, having a limited staff, which we have 2.5 or 3 staff or so coming in for just a few hours a week to help us do that. And the doctors are doing a lot of new things as well, things that they're not used to. So
I cleaned up an operatory, at least I pretended to today.
He's doing chart notes, he's setting up, he's cleaning up, he's finding Duralon, and he's putting on these crowns, and he's fixing dentures, and it's like, it's a new way of doing things.
It's fun.
We're doing it, we're making it work, and every time we do a little bit more of this, we get more patients that are coming in. So it is definitely something that's different, but it's working, and it's keeping us working along the way.
Keep in contact with your patients as well. That means, we were really concerned about patients calling for refunds. We were really concerned about that. That's barely happened. We have a number of people who prepay in our office. God forbid I should say that right now and see what happens. But just keep engaged. Whether I'm writing personal cards to people. I've got my card stationery right here. Here it is. So I'm sending out cards. Our staff has been sending out cards, phone calls. Even when Brian France was on last week, and he's busy president of the AAP, he's been calling his patients just to say hello, be engaged. And we happen to have a lighted sign, digital sign right outside that says, "We're seeing emergencies." On our website, there's going to be something that says, "We are seeing emergencies." Am I paying for a Google ad? No, not yet, but I might. Frankly, I feel so much better this week now that I've been able to see patients again, rather than look at whatever is going on the news all day. So that's a good thing. What are you doing to keep the staff engaged, Danielle?
Well, for one, I'm keeping in contact with them every day. I started a group chat on a text. And every day I'll say something like, "What are you guys doing today?" Or "What did you guys accomplish today?" And then people start sending pictures of, them doing stuff with their family or getting ahead on things. And also a little bit of office stuff too, just to kind of keep all that going. I have the 2 volunteers, so they're not volunteers because they're getting paid for it. 2 girls are willing to come in to see the emergencies, call some patients and do stuff. So we have that going, which is not only is it allowing them to stay into the practice and do stuff in the practice, they're also talking about it on the chat. So it's also getting the other staff ready and motivated to come back as well. So it's kind of keeping us all together as a unit still to keep that going. So I do want to touch base with them every single day, let them know, that we're all here and we're all still thinking about work and also getting stuff done. Like I said, with the members, what have you been putting off all this time? Clean out your drawers, clean out your closets, do stuff with the kids, teach them how to sew a button, cook some stuff, and get together and take some pictures. And so do all that stuff now. And so that they feel like, okay, while they were gone, they did all this personal stuff and they are really ready to come back.
Paul, how does this apply? I mean, you're a financial planner. You can still work from home. You can do the things that you would ordinarily do, but any principles that we've talked about that where you can add on to that a little bit as far as treating staff, treating your customers, that type of thing during this time?
Yeah, I found myself nodding so much during this conversation that I was almost embarrassed about it. I was going to mute the picture too, but you're absolutely right. There's so many things that are transferable. You're correct, and you and I have known each other a long time. My practice is all over the country, so I've always had this ability to work remotely. I was using Skype and FaceTime before it was popular, and now, of course, in Florida, you have to have a hurricane preparedness program available. So my team and I have been operating independently and remotely for the last 3 weeks. But you raised some great points, and I'll just give you a personal example about how the community appreciates your offices staying open. I happen to have a temporary crown in that's approaching 6 weeks now, and so I reached out to my dentist, and it was amazing. It was like going to an Intel floor plant, having hazmat suits on. Everybody had a covering on every part of their body, and I walked in the same way. But they took care of me. Half an hour, it was done. I noticed in the waiting room coming out, it literally looked like Thanksgiving, only it was Easter and Passover, with all the gifts that had been sent to the dentist's office, with the cards that all basically said the same thing. We're so happy you're with us. We're so happy you're open. Thank you for taking care of my daughter, whatever the case may be. That stuff proves huge dividends, as all of you know, later on. And the ones that didn't open are the ones that don't get that, and it won't materialize in the first couple of weeks, but that happens. I was struck by Danielle's comments about keeping the team engaged. That really is important, and that has been for me too, because we do have lulls. We're very busy from 8 to 10 in the morning, and then 4 to 6, particularly if I'm doing a wrap-up for one of the TV shows. We get a lot of calls after that of people just wanting to have a little bit more information. My team's kind of ready for that. But it's you have to keep them engaged in the middle of the day, or they take a very long nap. And then finally, the whole issue with this is, and I've noticed it in my field, the authenticity really sells. When these CNBC anchors and their guests do it from home, and all of a sudden their 10-year-old pops up in the camera with their hat on backwards carrying the puppy dog. The directors used to frown on anything that didn't look perfectly staged, but the surveys that are coming back saying, hey, I love Becky with a lot less makeup and her hair all not poofed up, or I like the fact that he doesn't have a sport jacket on. So there's a lot of real coming out of this that I think people appreciate, and you can translate that to your practices.
It's good. Paul, there's some people who are concerned, and I got the concern this morning. We have fixed expenses right now. And by the way, to be able to get $1,500 worth of income in a day was a big deal for me. It was Eleanor, my wife, said, yeah, it's like the first day you were in practice 40 years ago. So, but still, to have some income coming, that was good. But still, there is these fixed expenses. So most of us have furloughed our staff, and so they're able to collect unemployment whenever it comes through, because none of our staff has actually gotten unemployment. They've all applied for it, and they're all expecting the stimulus package to come in. But at the same time, we've got those other expenses. We've got those fixed expenses, the rent, and we've got the IT person and the person who's making sure that our cybersecurity is okay, and that type of thing. What do we do to be able to reduce our expenses during this time?
So, that's the $64,000 question, right? So in general, what you have here is a grand experiment. You're essentially taking a $21 trillion economy, and you're putting it in a coma for how many weeks and how many months, and then you're going to go restart it. we think it's going to happen that way. We think it can work, but no one's ever tried this. So what I tell people is try to reduce those expenses anywhere you can and preserve cash. Because while I believe the economy will be fine eventually, we don't know what that time frame is. And we can get into some details a little later. But to the extent that you can negotiate with your landlord, to the extent you can negotiate with any of your providers, they all want to do business with you when you come out the other side. So they're going to be especially lenient now. In New York City, for instance, they put a 3-month moratorium on rents, right? Nobody's going to do that here in Florida. They didn't even close the churches in terms of gatherings. So I doubt very much there'll be a law for that, but I think most landlords would take a 30-day reduction. And what we're seeing is then people pay that back over a 6-month period, 1/6 each month to repay the landlord. And if you want to throw her or him a couple of dollars extra to just be lenient about it, that they were lenient, that's great. But, you know, and I'll talk about this a little later when you're ready, but there's some financial planning moves you can make that essentially come down to that one comment I made earlier, which is preserve cash. I think things are going to be okay. In fact, I know they're going to be okay. It's just a question of how long it's going to take to get there. And so that preserving the cash makes sense.
Well, let's go into that right now, Paul. I think it's a good time to do that. And all of us are concerned about cash, and all of us are in different positions. We've got Danielle here, and we've got you, and we've got me, and we're all in different stages in our lives, in our careers, and so are our viewing audience, which is substantial right now. So let's talk about what we should be thinking about. Maybe what we should be thinking about if we're in our 30s, our 40s, our 50s, or 60s. What's the difference, and what do we first of all, we're concerned about having cash, but then assuming that we have some, then what do we do about it? And if we don't, what do we do about that too? I'll just throw the whole question open to you.
Yeah, well, so there's the triage aspect of this, right? That no one has to preach to doctors about, which is the first and foremost thing is save the patient and stop the bleeding. And then we'll talk about later in terms of what people do coming out of it. But the obvious and the thing that's gotten the most press is the payment for the payroll protection program that's out there. The Congress passed an unprecedented amount of stimulus. They're going to do it again. It's almost amazing to me that this happened. I mean, you had Republicans that abhorred debt that voted 100% across the line for this program, which said to me they were very serious at getting it done. The Fed has stepped up big time. For any of you that haven't followed the payroll protection program, essentially, if you have less than 500 employees and you keep your employees employed, you get the opportunity to get up to I mean, the limits vary, but it's essentially 10 million. If your business is strong enough where you can qualify for 10 million, you've got a lot of practices. But in any event, you can get 75% of your loan forgiven if you use it for payroll. And even if you furloughed or terminated your employees, if you hire them back by June 30th, they qualify for this. The plan goes through the SBA. Your bank generally can handle it. If not, an SBA lender can handle it. Some banks are taking the position that if you don't have a business account with that bank, then they won't do it for you. As far as I'm concerned, when this is over, I would never talk to that bank again, but that's a sidebar. Most banks are SBA approved lenders, and that's the one you go through. The exception, of course, that's gotten a lot of press is Wells Fargo. Wells Fargo was suffering from some penalties that the regulators put upon them for some misdeeds, and it capped the amount that they could loan. So they ran into problems almost immediately. Within 3 days, they were maxed out at the amount of loans that they can do. Yesterday, Congress gave them an emergency reprieve. Wells Fargo has gotten their cap lifted, so they should be back in business. One of the things to be aware of is if you're with a small bank, you probably have a better shot at doing this than Wells Fargo, Citibank, or any of the large JP Morgan Chases. Keep in mind the details of this program is if your loan is forgiven, it doesn't matter. The money doesn't have to be repaid. But any of that money that isn't forgiven, it's a 2-year loan.
We are frozen. Is there anybody? Danielle, you hearing me okay?
I am.
Okay, Paul, you are frozen out right now. So if you can hear me, that's great. We cannot hear you. As we're going into this, by the way, we do have Wells Fargo, and we were in the unfortunate position of being, we filled out the application within the first 2 hours. It was ready on Friday. And by Saturday, we were told we were timed out. And now we received a notification from Wells Fargo yesterday that, in fact, we are in line. to receive the loan. I think there's a number of different ways in which we can look at that, and I think those of you who are at least part of our membership group, not a membership group, but who are on our mailing list, I've given you the different viewpoints. So you know, do you ask for the loan now? Do you ask for the loan later? And Paul will comment on that, I'm sure, when he comes back. But there are opportunities for us to, you know, we've got to decide when we're going to come back. And there was one group that said, listen, as long as you get the loan, you can get the loan, but understand you have 8 weeks to spend that loan. And we may not be ready to go back into practice in 8 weeks. Maybe yes, maybe no. Others are saying, listen, wait until you're ready to get back into practice. Let your employees, let your staff members collect unemployment until that time. And then about 2 weeks before you're ready to go back, then have the loan come in, and then you can use the 8 weeks during that time when patient load might be a little bit lighter, and yet you still want to employ all of your staff. So those are the two different theories. Paul will talk about his theory in a second when he comes back, and I hope Paul.
There is a question regarding that. You may have answered it, but I want to make sure that this person gets an answer. He says, what happens if you furloughed your staff? Can you still apply for and use the PPP?
And the answer is you can still apply for, and you can still apply for the PPP, but understand that, and I'm no financial expert, but understand that when you get the PPP, when according to what we've heard, which is the date the loan originates, which means the day that you receive the money. And we had looked that up. Originally, we thought the day the loan originates is the day that you apply for the money. No, it's the day that you receive the money. You've got 8 weeks to spend it during that time. Now, do you need to hire your staff back for all 8 of those weeks? Not necessarily. You may hire the staff back for only 6 of those weeks, leave the staff on furlough for the first 2 weeks out of that 6 weeks, or the first 4 weeks out of that 6 weeks, and then you spend the money over the next 4 weeks. But you'd have to plan it, because for loan forgiveness to occur, 75% of that money has to go towards salaries. Perhaps it has to go. It can go to health insurance and go to pension and profit sharing plan. That has not been clarified, at least for me yet. And only 25% of it can go to rent and utilities. So in order to get the complete loan forgiveness, you have to follow the 75-25 rule when you're making your expenditure. If you can't follow the 75-25 rule, it doesn't mean you don't take the PPP. You do, but then you're going to have to pay interest on that loan, and that loan is going to be good for about 2 years. And we welcome Paul back. Hi, Paul.
Sorry about that. I'm not sure why I dropped. The internet was strong, but just to finish on what Dr. Sheldon was saying, payroll, health insurance premiums, all other insurance premiums, mortgage, rent, utilities, and even what they classify as other debt, which could be school loans, it could be practice expansion loans, any of those interest debts. So let me jump over to financial planning, because the PPP program is pretty universally known. A couple of things that I've told clients, if any of you have outstanding credit lines, and again, this goes back to preserving cash. We think everything's going to be fine in the next couple of months, but during 2008, 2009, a lot of the banks rescinded practitioners' credit lines. They clamped down on the amount of home equity was available. As soon as the banks had problems, they did that. Now, our banking system is in much better shape than it was in 08 or 09. But what I've told people that have credit lines available, go ahead and take it, max out on your credit line, put it in the bank, pay the differential of it'll cost you 2.5% to take the loan, and you're probably only getting 1% interest, but leave it there. If you're short on cash at all, it's sort of an emergency technique that you have the money available just in case you need it, particularly if the bank for some reason were to shut down access to that. I would recommend you suspend your retirement plan contributions. Any of you that have defined benefit plans where the contribution is pretty substantial, there are ways of reducing or eliminating that, or at least suspending it for the year. One thing I heard from an accountant friend of mine, he was telling his clients to forego their insurance premiums. And I said, that's the last thing you want to do. Make sure you pay your insurance premiums. God forbid if you needed it or your family needed it, particularly disability and long-term care. the stress that comes with these types of things tends to kick off problems that those areas pay for. Life insurance, if you don't have term insurance, if you have permanent insurance and you have some cash value, you can cheat a little bit and have the dividends or the cash value pay the premiums if you're worried about cash flow. But the other two, I wouldn't screw around with them. I'd make sure you had them. And then finally, for anybody that's got any issues going on, health issues, excuse me, and you're worried about this, I would make sure your wills are updated. I can't tell you how many times I see ex-spouses listed in wills just because it got away from them. You can do this online with your attorney. The attorney can send a codicil. You can get it witnessed by somebody. Don't let the attorney tell you that you have to show up in the office for a visit. It doesn't have to happen that way. Excuse me. Are there any questions on the financial planning that you might want to throw to Dr. Sheldon or Danielle before I move into the thing that everybody seems to ask about, which is investments? What should I do about investments?
Daniel, let me see. Okay, can you describe or post a photo of your "We Are Seeing Emergencies" sign? I can't do it right now, David, but essentially on my lighted sign, it does say, "We are seeing emergencies. Please call 321-259-9980. We've got a big enough sign that people can see that from the street. How do you estimate the amount requested for the PPP? Is the maximum payroll times 2.5, or could it be more? Paul, can you help us with that?
It is 2.5. That is the max that you're eligible for, up to the limit of 10 million.
Okay. And the next question is, can the PPP used to pay yourself if you're a sole proprietor?
Yeah, if you're a salaried employee to that entity, independent contractors are included as well as single member LLCs. So the answer is yes.
All right, that's good. So we've got we've talked about the preservation of cash, and we might want to talk about financial planning now. I think there's two questions that are bugging me, but let's talk about the financial planning aspect first. I mean, everybody, those of you of my age, you're saying, all right, what am I doing about retirement income right now? And there may be a comment there. And the younger people are saying, all right, listen, I'm supposed to be building up that nest egg right now. What do I do? And is there a way I should build it up right now? Is this a great buying opportunity? Give me some insight there, Paul.
Yeah, no, I think you nailed it on the last comment. For the younger people, this is effectively a do-over. There's been a tremendous run-up in the market since 2008. And December, January of this year, there were a lot of us that were getting people away from the market because we had seen such a run-up and it was so richly valued. Fact of the matter is, you've had reductions of 30 to 35% in things like Apple, Disney, Qualcomm, Verizon, high quality companies that you know are going to be here. I'm not talking about the speculative things. So you get a do-over here. What I tell you on the investment side is, if you or your advisor didn't go to cash in a lot of your areas before now, if you're under 60 years old, I wouldn't do it now, because the market's going to recover. It's going to be 3 to 6 to 9 months, but it's going to recover. If you're over 60 years old, I would use the recent week and a half run up as a chance to really reduce your risk. If you haven't rebalanced over the last couple of years, if you originally had a 50-50 portfolio of stocks and bonds, the way the market's gone up, you probably have a 75-25 portfolio now. If you want a 75% of your invested assets in stocks, that's fine. But if you hadn't really planned on it, but it kind of grew up there, now's a chance to really relook at that. We call that rebalancing. But I think it's important to assess how much you want to keep in stocks versus how much in more safe assets, and then make those switches now. Particularly if you're over 60, if you got caught with your proverbial investment pants down in January, your advisor didn't have you backed off a little bit. We did that in a number of the older clients' cases because we didn't know there was going to be a coronavirus, but we certainly knew that after a 30% year in 2019, it would be a miracle for that to repeat in 2020. So if you didn't do that, now's a chance to repeat and take some of those chips off the table. And I might add, by the way, a lot of you have your assets built up in IRAs and pensions as opposed to personal investments. If you have the choice, sell the equities that have embedded capital gains in the IRAs and the pensions. You don't owe any tax when you do that. If you do that in your personal portfolio, you still might have gains if you haven't touched those stocks in 10 years. So to sell it is going to kick off a tax. Yes, you're going to protect yourself, but you're still going to have an income tax to pay April of 2021. The other thing I would do, and I think this is important, if you want to, quote, play this recovery, compliance reasons don't allow me to tick off a bunch of different symbols of things you can buy, but you can get my phone number or my email from Dr. Sheldon, and I'll give you some specific recommendations if we talk personally. But suffice it to say that the way this recovery is going to happen is it's going to be a US-led recovery. In the old days were December of 2019, we diversify clients in large cap, small cap, international, and domestic. Now it's going to be essentially large cap domestic that's going to lead this recovery. So if you're in something like an S&P 500 index fund or an ETF of the S&P 500, you're gold. I would leave that alone, and I would actually add to that. And I can give you more specifics if we ever talk personally.
You know, there's, I think we're all dealing with this emotionally, Paul, and I know emotions are the last thing that should direct you when talking about investments. Your clients must be calling you. Certainly, I called you. What do you do? How do you babysit for yourself?
Well, so, you know, as I shared with you when you and I spoke, not that many have called. And part of it is because this isn't my first rodeo with them. I have a lot of clients that have been with me for a number of years. And they look at this and go, I remember '08, and you said the world would come back to normal, and it did, and I'm fine. That's actually a danger in this one, because the calls I've really gotten is people coming to me saying, all right, great, you had me in cash in January, let's buy the dip. Not quite yet. This is a little early. This isn't the same as 9/11. We're in real uncharted waters here. You have some political uncertainty, and more importantly, you have healthcare concerns. We don't know. I call it a grand experiment. We have an old collector car in the garage. Kim's got this vintage Mercedes that she keeps that gets started up once every couple of months. If it's too many couple of months, it doesn't start up. The battery's dead. I'm concerned about that as an analogy to this economy. So while I would say if you're younger, buy the dip and get into some really, really cheap but high quality companies now. If you're older, I would play this a little differently, because frankly, you don't have the 10 years of chronological time to make up a loss like we've made them up in the past times, right? So now it's more protecting your assets. Yes, you can make a couple of dollars, but be careful doing that. But those are the conversations that I've had. Most of the time, though, if I do get calls, I tell my staff regularly, we don't get paid for the good times. We get paid for right now. We get paid for being available. There are calls at 9 o'clock at night, Saturday morning, Sunday afternoon. A lot of my clients are my friends. I don't mind hearing from them, but what you really need to do is just let them know that we've got this covered, that their allocation is secure, that they're not going to be destitute. And at the end of the day, that's the big question. I've worked all my life. Am I going to have this money?
Good, Paul. Let's see what else we'll see. You stated that we should postpone our 401k contribution if you were obligated to put maximum money in before April 15th. Do you still postpone even though tax filing is now July 15th?
The answer is yes. You do have that ability to postpone now. And we're going to see regulations from the Department of Labor coming out to further clarify that. But they're going to have to match up, which they haven't yet, but they will. They'll match up retirement plan contributions with the tax filings.
Okay, and that's good. And this is a comment. You can respond to it. I'm not sure how I would. If you're over 60, why buy overvalued treasury bonds when you can buy undervalued stocks? So
I want to meet that person and buy them a drink as soon as we don't have to social distance. I couldn't add anything to that comment. That's absolutely spot on. You know, we've had treasuries, we've had bonds and portfolios with years of low interest rates, not for the need for income, because who gets excited about 1% income, but for stability in the portfolio, so that if somebody isn't 100% stocks, they're 60% stocks and 40% T-bills. And so it's not exciting, but it's the part that's what we call the riskless asset. But currently there's some risk in bonds. In fact, we in the business today watch the credit markets more than we watch the stock markets as indicators for problems. And if you follow this at all, there have been some indicators of problems vis-a-vis the credit market. So I agree with that question. Where you have to be careful is typically up until this past month, older folks bought stocks for the dividend yields, and I suspect that the dividends will be under pressure over the next year or two. You look at companies like ExxonMobil, it's been terrible as a stock performer, but the dividends held up. Same thing with IBM. If these companies have any additional problems, the first thing they're going to cut is their dividend. So again, I proceed carefully, and much as I don't like the return on cash, there was an old saying, the return of your principal is sometimes more important than the return on your principal. And that might be a reason to just hoard cash for a little while.
Is there any comment you have, Paul, now on real estate? Do you see real estate going up, down? Is there anything that
we could do an entire hour on that. You'd have to split that between residential and commercial, but I'll make a quick comment on both. I think residential is going to go off the charts, and it'll happen for two reasons. Number one, right now there's an anomaly in the jumbo markets. The jumbo market mortgage rates popped up, but a normal mortgage today is 3.25%, and if you had any kind of structure on it, could go to 2.9, and I think it's going to drop even lower. The jumbos will follow suit. People, as they get more comfortable working from home, they're going to stay in their homes. They're going to upgrade their homes. They may even buy a more comfortable home and not go to the office as much. First-time homeowners are going to get the buys of the century because mortgage rates have never been so cheap. So that's why you see the home builder stocks running up like crazy, and I think that'll continue. I'm more concerned for some of the same reason of the commercial markets. I tell the story of when I first started in business. We were so proud of the fact that we had 7 offices. I could show 7 cities on my letterhead. And then my accountant, who's a cagey old guy from Miami, said to me, you know, it's a shame you got to pay rent for all those offices. I thought to myself, oh my God, no, clients aren't coming into all those offices all the time. Fact of the matter is people are going to have less in terms of commercial space and more in terms of a mobile type of operating center. And I think that's going to impact commercial space big time. I see it in big law firm clients that I have now, where the law firms have the premier AAA space in Orlando, in Tampa, in Miami, in West Palm Beach, in Philly, in New York. They're starting to downsize from that. So I think it's going to be an impact going forward.
Listen, if I was able to have 2 Zoom meetings on a Saturday as a dentist, where I really need to have hands-on in order to be able to really do what I need to do, but I don't need that for diagnosis, even there where it's making a difference. By the way, Zoom is HIPAA compliant. They've taken pains to do that. So there are opportunities there for us to get started and perhaps change the way we're doing business a little bit. Imagine doing an examination, or at least doing a medical history and perhaps an additional review of findings without having the patient in your dental chair. No, we've been calling our patients in advance for years. Patient makes an appointment with us, and before the patient comes in, I call the patient and say, hey, what's going on? You know, tell me about what's going on. And frankly, it reduces a lot of chair time. Well, now everybody has a phone. You can not only just do a call, you can do a video call, you can say hello to each other. And so what's applying to the real estate industry, what's applying to the banking industry, what's applying to the personal services department can really apply to us too. Maybe not as much because we're a doing type of specialty, but still it does apply. And it's very, very impressive.
One of the things I'll just add to that conversation, one of my favorite stocks, again, without endorsing it or not endorsing it, is TellDoc. And that stock's been off the charts because of this very reason. Now, there's certain things that you have to have the patient at your fingertips to work on, right? And it's not. So this is more of a diagnostic system. But like Zoom, like TellDoc, like Peloton, there are going to be companies that benefit from this migration towards more home services. And to the extent that you can do that, either from an investment capacity or from an entrepreneurial business capacity, it makes a lot of sense. I don't think this trend is over.
Good. So to wrap up, Danielle, how are you changing your life?
I just took a bunch of notes. I have to make an appointment. Yeah, I was wondering about a lot of that stuff as well. You know, is it a good time to sell your house? Is it a good time to buy a new practice? Is it, you know, what do you do with that? And also, I know one thing that I was looking at was, you know, I do have quite a bit of equity in my home. Is this a good time to do an equity loan just so you can have some available cash if you need it, because all those rates are going crazy?
Danielle, you have my number. You call anytime. You get a more than an hour free consultation.
Good.
That's good. It is a time for us all to retool. And for those of you who weren't on at the beginning, I'm going to repeat, remember you're a dentist first, a periodontist second. Take advantage of the knowledge that you have. Take advantage of the skills that you have. Patients need us, and they may not need us in exactly the same way as they did. I hope they do. I hope it's exactly the same practice when we come back. But just keep in mind that you're trained, you're highly trained, and patients need you. They need their diagnostic skills, they need your treatment skills. And even though you may be doing it this way, let's broaden out a little bit and think about what you can do. If you need some additional training to do that, fine, go out and get the training to do that. And everything is going to be fine. You're going to be fine. People need dentistry. And whether it's perio or whether it's dentistry, they need dentistry, and we can all do it, and we can all do it very, very, very well.
Did you answer the question, Dr. Sheldon? Someone asked about how to get on the email list for these webinars. Because
just write to me, Lee@directorofdentistry.com, Lee@directorofdentistry.com, and you'll be on the list. You'll be notified of all the webinars.
Lee, if I can just mention along the lines of what you said, a couple of months ago, I lost one of my heroes, a gentleman named Clayton Christensen. Dr. Christensen was a Harvard professor, and if you Google him, you'll see some of the work that he's done. But he's essentially the father of the disruptor age. He's the one that basically looked at industries that would just be disrupted, and then he identified many times the companies within those industries. So whether it's Uber to taxis, and you can go right down the list. But the bottom line is, look at some of Christensen's work, Clayton Christensen, but he's talking exactly about what Dr. Sheldon just said. The ones that are nimble and the innovators are the ones that survive and thrive. The ones that don't retire early.
Thanks, Paul.
yeah.
Paul Auslander, Danielle Somella, thanks and everybody. What a great participation. Thanks for being part of this. We're going to do something again next week. We'll let you know. In the meantime, it's an overused term, stay safe, but I want you to stay safe. Understand that we are now, listen, the news is getting better and better. You know, the curve is moving closer to this date rather than being put off farther. And the number of fatalities predicted at least is going down. Let's look at this from a positive standpoint. Let's start looking at how we can improve ourselves, improve our practices, improve our lives, and we're going to do just fine. Thanks for joining us. We'll see you again next week.
Thank you.
Yes. Thank you.